Hello, I'm Takesha Wade. I am the insurance and financial advisor here at Wade Benefit Services. And today I want to just go over some information with you about a proven insurance benefit concept used by Walt Disney, Ray Kroc, and many others, which allows the average Joe to become their own banker. And it does this without putting your money at risk, without locking up your money for 30 years, also without you having to pay taxes on the returns that you earn. Now, this is a financial principle, but it is based on the U.S. tax laws and the contractual guarantees that are provided by whole life insurance policies. And with this concept, it promotes using the cash value in your whole life policies through policy loans to help finance the purchase of tangible products. So, let's go over who is insurance benefit concepts for. So, it's for that person who's looking to have an emergency fund for unexpected expenses, or maybe that person who wants to use IBC throughout their life just to help with things like mortgage protection or business ventures. Or better yet, if you need help paying for, let's say, your child's education or to supplement retirement. A lot of times I've had clients who's used it to get out of debt, myself included, or in a way, anyway, basically, you see fit. So, how does the insurance benefit concept work? So, let's break that down. So, what it does is using the cash value in your whole life policy rather than using a more traditional method of financing. And so, with that being said, that can offer a better way to increase your net worth and cash flow. And it does that because it gives you access to this money, which has been growing tax deferred, tax free, and without penalties at any point of time because of the liquidity favors it has. So, what is our insurance benefit concept process? So, let me break that down to you, what we do here at Wade Benefit Services. So, our process is this: we only use mutual insurance companies. And so, that is very important to understand because mutual insurance companies are basically owned by the policyholders, where stock companies are owned by shareholders. We only work with companies who've been paying dividends way over 60 years. So dividends is something that is not guaranteed, but that's why it's so important to work with a company who has a history of paying dividends year after year and has a proven track record, because that is something that's so important to work with this IBC concept. We direct most money into the cash value bucket. So we do that by making sure we minimize your premium costs and the cost for insurance. So it's not your average whole life policy because you're not paying an exorbitant amount of premium towards insurance costs. Okay. Also, we prevent a modified endowment contract, which may basically this contract makes and turns the policy into a taxable event. And so we make sure to reduce that so something like that does not happen. So we are very strategic in our IBC concept. And we make sure that you have available between 80% to 90% cash value in year one, in the first year. Okay. And so from there, what it does is it allows you to break even between years 3 and 6. So what you're putting into this IBC concept policy is basically maximizing the benefits for you and what your goals are. And when we say break even, meaning what you have put into it within, by the time 3 to 6 years come around, you actually have put in just as much as you're able to get out. Okay. So after that, everything is just pure gravy from that point on. Okay. So how can this concept benefit you? Let me explain that. So the way it benefits you is because we make sure to carefully design and optimize this policy so it delivers the absolute best cash performance. So you have to understand that the correct policy design is an exact science. So that involves the proper blending of base premium, riders, and many other subtle factors that will all greatly affect your policy. So we have to be strategic. It's not something that happened by chance. It's a strategic concept and strategy that we use. So here at Wade Benefit Services, we're not doing any off-the-shelf cookie cutter policy or a traditional whole life policy for this concept. And the reason being is because it's the least efficient method to build cash value. A traditional life insurance policy, basically a traditional whole life policy, it often yields $0 in cash value initially. So, what are the benefits of the insurance benefit concept plan? Okay. So, the benefit is basically when you're able to borrow against your whole life policy, you aren't actually borrowing your policy values. So, that allows your money to continuously to grow. But you are borrowing the insurance company's money. And so, what that does, it does put a lien against your policy. Okay. And so you aren't subject to credit checks like traditional financing. And you usually get the money within a few days. It could be direct deposit right into your account. You have no fixed repayment schedule. That is very important. So it's no time frame saying you have to pay this money back by a specific time. And then, of course, the money obtained through these policy loans usually would not trigger a taxable event. So we're able to allow you to get this money out of this policy and it's tax free. Now, I do want to make sure you understand, as a licensed producer, I'm prohibited from giving tax or legal advice. For advice on any tax or legal issues, please make sure you consult your own advisor. I just have to put that disclaimer in there. But from doing this for over 10 years, and for me, actually myself having one of these policies in place, I know firsthand how it works. And when I take my money out through policy loans, I do not pay any taxes. So what are the cons with IBC? So nothing is perfect. No plan is exactly the most superb plan where all it is benefits, benefits, benefits. There are pros and there are cons. So let's be realistic and talk about those cons, okay? Now, one or two of the cons are basically this is a loan, okay? So any loan amount that isn't repaid will be deducted from the policy's cash surrender value, and outstanding loans can impact dividends. So what that means is this. These policies are long-term policies. These are something that you're building for your future. It's not a policy that you want to get into if you're trying to get right back out of it within a few years. Now, you don't have to pay into these policies for your whole life. You can say, hey, I want to pay into a policy for 10 years and then have this policy just keep accumulating the max cash for me. But what you don't want to do is surrender the policy, because what happens is it changes the concept of what the policy does and what the policy is. And therefore, that repayment of those loans will be deducted from that surrender value. But that makes sense because you took the money out, you borrowed the money from the insurance company, your money kept growing. So if you say, hey, I no longer want this policy, if something happens and you have to say that, then they're going to take the money back that you borrowed. Okay. And it can impact dividends, because the only thing is that dividends are never guaranteed. That's why we work with mutual insurance companies that has been paying it for so many years. So they have a track record. And just to explain, a dividend is an annual yearly payment guaranteed by an insurance policy to have for an insurance policy holder. So it's often a permanent life insurance or long-term disability policy. The dividend amount depends on factors such as profit made by the insurance company, investment performance, and the amount of money paid into the policy. Dividends are only paid by mutual insurance companies, not stock companies. And this is important. This is what we talked about before, why we only use mutual companies, not stock companies. Also, the other con is if you as the policyholder die before the loan is paid back, the outstanding amount is deducted from the death benefit. Okay, so the death benefit is something that goes to your beneficiaries, And so it's just taking up that amount out. And so that money that the beneficiaries receive is tax free. Okay. So these are a few of the cons. Now, you have to understand there's no perfect financial concept, just the right financial concept for you. That is very important to understand. So, here at Wave Benefit Services, we want to help you build a solid financial plan for your future. So, what's the next steps in getting this done? So, first, we want to make sure that you book a call on my calendar. So, you'll see on the next slide, you'll see a link that you can actually click to book a call. And then also be ready to talk about your financial goals and concerns. That is so important. We want to talk about goal timelines, income and expenses. How long do you want before you get to this specific goal? Is so important. And then us, here at Wave Benefit Services, what we do, our focus is to make sure we can find the money and make sure that we can help you find money that you're already basically spending inefficiently and move it to a way that you can spend it more efficiently for your future goals. And then also, we will go over a real client illustration and case study for example purposes only. So you can see an idea on what the numbers can be. And then I will answer any questions you have to the best of my ability, to the best of my ability. And then we will set up a second call on my calendar to speak about specific financial data pertaining to you. So we will go over that specific, let's say, illustration or design that I create once I do more research, specifically for you in that second appointment. Okay. So this is me, Takesha Wade. My contact information is here. This is my email. This is our office number, local and toll free. My direct extension is 237. And then you will get a PDF copy of this file, so you're able to click on the link to book with me. Okay. So I look forward to talking to you soon, being able to help you build a solid financial plan for not only you, but your family. So thank you for your time and have a blessed day.